Welcome back to Krown's Crypto Cave, getting ready for a nice little hump day analysis on this overcast Wednesday morning over here from Helsinki, Finland. As always, do want to be wishing you the best, and the happiest of the happiest. Just wishing people well, because why the fuck not? And today's going to be a little bit different as well, because I want to keep things a little bit more fresh. And realistically, Bitcoin's been doing fuck all since yesterday to today, so we don't have really too much to update as far as, especially the higher term timeframes go. Of course, the lower term timeframes are actually going to offer a little bit of an edge here. But the real interesting proposition that we're looking at is actually going to be a correlation between multiple different markets. So with that in mind, I also want to put the focus on the Krown trading application over here, of which it'll be receiving another update this coming Friday. So get ready for that. But for right now, you can find it at app.krowntrading.net, and it's 100% free. So take advantage of it. Anyways, looking at the open interest, we're still caught within the range. So it's still working. It works until it doesn't, essentially. But that sort of theory that we've been looking at, more or less holding for now, as the 1.5 billion to 1.7.5 billion range is still holding, essentially, and we're looking for a break outside of that range, plus a break of the long-term range on Bitcoin, which again has been unchanged, 9,900 to the upside, or about 89, actually probably about 9,000. We'll check it out where that trend line comes in today, but I'd imagine probably around 9,000 to the downside. So I want to see a move above or below that range, plus a move outside of the open interest range. That's going to really provide a lot of confidence with this next big macro turn of events, if you want to call it that, or at least a higher term time frame turn of events. We're looking for like a multi-$1,000 move here, essentially, as Bitcoin winds itself up, getting ready for a nice expansion phase on our higher term time frame historical volatility percentile settings. Anyways, we'll get into that with actual examples soon enough. All the other top end metrics, pretty much the fucking same. I mean, Jesus Christ, man. You could be looking at Bitcoin, or you could be masturbating with sandpaper, and it would be equally as fun right now. Anyways, let's go into the actual charts themselves and check out what the harbinger of perhaps peace and prosperity is going to be bringing into Bitcoin's life. So here's a chart of NASDAQ futures, of which they've been having a pretty damn good closure here on the higher term timeframes. Bitcoin being correlated with these, as we'll show in just a little bit, or at least I'll show you the information, then you can make your own what's it called, conclusions from that. But looking at this right here, I mean, this looks very obviously like that pullback that we were looking for down to the 9350-ish area. I'm not saying these things to come off as arrogant or to toot my own horn, even though it can kind of sound that way, I suppose, sometimes. But more importantly, because we can follow up from this over the last couple weeks and document these areas getting tested and the reaction from them, or the response from them, maybe better said. So I really want to spend some time on this right now, because this is, as the 3-day has closed, a higher low and working on closing on higher highs as well. So we're looking at continuation here. Very, 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 very good reaction off the 9350-ish area, of which we had it marked off a little bit of, I think, like about a couple weeks ago. Yeah, going back to actually about a month ago. Interesting. Mid-May. And also the 886 fib getting retested right there, and so far so good. So realistically, what I can say now is that I am not in any way, shape, or form bearish on traditional markets, NASDAQ in particular, as long as we're above about 9600-ish region, especially on a higher term time frame closing basis, at the very least a daily. Now, if that area does get destroyed to the downside, I would look for an extension all the way down to about 9100-ish region right here, and I'd kind of be playing the same sort of position there, essentially. Of course, this is not financial advice. I'm not a financial advisor, but why is this even relevant to Bitcoin? Well, let's go into the actual, let's go into the fun part today. So here is a chart of all the different correlations, all of the different metrics that we can use for correlations that are relevant right now. Now, of course, it's actually more if you really want to get deep and down and dirty into it, but realistically, at the end of the day, I mean, we can do all the math on it and everything, but at the end of the day, it either is or isn't, and what's most actionable is right in front of us. So I think that Bali's done a phenomenal job actually putting this together. I didn't even request this. I mean, he's just that fucking brilliant that he can pretty much read my mind, essentially. I think that he understands my style just as good as me, and with that, he's able to create these tools that essentially confirm a lot of the things that we've been postulating here that I wasn't able to prove mathematically, but prove with other tools. So it's kind of like the coming together of two different styles, which I really do like, as it's just more confluence, essentially. And so what we're looking at right here is a correlation between Bitcoin on Bitstamp and in SPY on SPY's fucking traditional market major Boris, the major fucking index. And what do we see on a weekly read right here? So again, sorry, let me reiterate, why are we even looking at a weekly? Well, the reason why we're looking at a weekly right now is because when we're talking about long-term trend, we need to be choosing at least one of the semi-higher term timeframes, of which for the traditional markets, that's going to be about a weekly. And in this case right here, we can see that the correlation coefficient for Bitcoin on Stamp versus SPY is literally a 0.871. And this is within a, in the confidence interval encompassing this goes all the way from 0.7 essentially to 0.95, which is pretty fucking good. I mean, you don't really see that all that often, except for assets that are, well, pretty fucking correlated. So the thing that I'm kind of postulating here is that the strength in the traditional markets likely does bode well for Bitcoin and will help kind of round out my good old bias boner. At the end of the day, do the levels matter more on Bitcoin for myself? Yes, but it does kind of help provide a little bit of an extra edge on top of that. So again, combining all the tools. Now, of course, this is SPY and not even NASDAQ. I'm curious what NASDAQ would show. I haven't even looked at it actually. So far. So let's go check it out. Let's go look at NASDAQ E-mini futures right here. It's going to be the continuous front month. And what do we see? About the same. Confidence interval is 0.75 the correlation is 0.9 almost. Hold on. Let me, okay, sorry. I had to expand it here. Yeah, almost 0.9. So even a little bit higher there. And confidence interval to the top side, 0.956, and to the downside, 0.739. So a little bit of a wider range there, ever so slightly, but more importantly, we see that Bitcoin and basically all major markets are kind of in unison right now. Or the way that my mentor used to relate this idea was like they're in what did he say? They're in concert with each other. He thinks of it as like a like a music conductor, if you want to make that analogy as well. Anyways, my point is that this is pretty fucking strong here. And so strength in NASDAQ, especially when it's looking like it's posturing for a move back above 10,000 and likely into new all-time highs, that likely does bode well for Bitcoin, or at least it's going to give Bitcoin that next sort of opportunity to break out to the top side of the range of the long-term area at about 9,900, which would put it essentially in concert once again with traditional markets as they do continue on the uptrend on the higher term timeframes. Now, if we go over and just to like put this into perspective here, what we can do is we can, instead of looking at NASDAQ, we could look at gold's correlation versus Bitcoin. And what's interesting about this, gold's correlation versus NASDAQ futures. So remember, Bitcoin's correlation to NASDAQ futures was like almost 0.9. That's incredibly high. For perspective here, Bitcoin, which typically gets put in the same basket as gold, is it correlated with it? Actually, not nearly as much as you would expect, especially considering that it's like almost about 0.579. That's again juxtaposed against a almost 0.9 read that we saw on Bitcoin versus traditional markets. So that's a humongous difference. And again, if we want to make another what's the word that I'm looking for? Reference here. Let's go look at something like silver, for example. I'm curious what this one's going to show. Actually, I haven't looked at this one just yet. Funnily enough, it's actually a lot more correlated with NASDAQ futures than gold is. So interesting. Gold being the one thing that does seem to be more or less. It's not that it's uncorrelated; it's that it's less correlated. You never really get like a true zero read on the correlation coefficient, but anything closer to zero is going to essentially going to register as such, or kind of provide the same sort of thing. So I just want to check that out right there. Also, just out of curiosity, I'd want to see like what's another one that people typically. I'll figure that one out later. But for right now, I just wanted to show that overall, the strength in traditional markets, if you are a crypto anarchist and for whatever reason hate traditional markets and just wanted to go to the fucking floor, which fair enough, that's a fair proposition. I'm not here to tell you how to think or anything like that. But as you can see right here, if you think that benefits Bitcoin, that kind of just makes you an asshole rather than a objective observer, at least what the data would show, as realistically, a rising tide is going to be lifting those ships, which suggests that Bitcoin is not really the hedge that a lot of people are looking for. I think that this was pretty much confirmed on that last major down that we saw in March, all the way to 4,400 when you saw this down right here in NAS. So at the end of the day, my point is that we've been harping on this for a long time, and you see a lot of different ideas going around, especially the crypto sphere. People saying like the money printer go burr, and that's going to be good for Bitcoin. Well, it's also apparently really good for traditional markets as well. So I'm curious where those people have gone and what sort of rationalizations they have made, or maybe have they let go of those ideas and finally admitted that, hey, maybe I'm perpetuating some bullshit over here. maybe that. But for right now, the maths and data, and if you just look at an overall fucking trend, I mean, Jesus Christ, man, it does not take a goddamn mathematical genius to see this right here. Not that it doesn't help, but if you just want to prove it in the most basic of basic ways, well, does this look correlated to you, sir? I'd like your opinion on this. Does this look correlated to you? This is now. Oops, let's get this on log scale right there. This is NAS futures versus Bitcoin on. Or sorry, let's actually take off NAS futures. Let's do it with SPY, SPY. There we go. I think that one's got a little bit of a better history, especially if we put it on log scale. Well, we can get all these guys on it. Or sorry, let's put this one on log scale, these guys on log scale as well. And as you can see, when they're both rallying on the macro, they're both rallying together. Now, correlation does not mean that they move in a one-to-one step, like lockstep. It just means that when one's rallying, the other one's rallying as well. What kind of decides the percentage gains against each other? Well, that's a whole different conversation, which I think is what people kind of confuse with correlation. Like people will say Bitcoin went 1,000% over here or whatever it was. Well, that's not what that's saying. That's not what that's saying at all. In fact, it's just saying that when one is in a macro uptrend, they're pretty much all in a macro uptrend. As you can see, they both kind of all three of them top out basically at the same time in June 2011 within reasonable distance from each other. And then what happens right around here? Well, they both all three of them bottom out pretty much at the same area. Now, traditional markets do make new all-time highs first before Bitcoin. Bitcoin follows through on like about a year and a half later, but then they all go into their macro up phase once again. And then in 2014, big bad down, especially in Bitcoin, tops out a lot first. However, traditional markets take actually a little bit later, but still same thing on the macro whole. What do we see again? Traditional markets making new all-time highs sooner rather than later compared to Bitcoin. Bitcoin falling through afterwards. And of course, the fucking sync has to be going right now. Oh, well, just giving Elsa some shit, which she absolutely loves. Anyways, same thing in 2018, both topping out a little bit after Bitcoin as well. And then what happens? They all come down in unison once again. Seems like the downs are a lot more in unison than the ups. And then the ups coming in from all the way from December 2018 to more recently in March 2020. And then what happens right after that? Same shit. So again, it's one of those things where it helps to understand the greater market at whole. And this is why I really, 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 really strongly suggest to not fall in love with just cryptocurrencies, because if you do that, you really take away the advantage of getting a more nuanced and wide view on the markets in general, because more or less things are related to each other in this world, meaning that if Bitcoin's going to be doing well, then that means that kind of everything else has to be doing well as well. And that again goes against the whole fucking gang-like mentality, which I'm very much against. I really dislike this about the crypto space, and it's not just specific to the crypto space. I've seen it in fucking gold. I've seen it in silver. I've seen it in all the precious metals. I've seen it in stocks. People fall in love with stocks. I've seen even people fall in love with drinking laundry detergent. I mean, this is all the same shit. You cannot join a gang if you're going to be a trader here, or at least be a successful trader. That is, you can be a trader, it's just not a very good one. So at the end of the day, it's very interesting and a little bit of a sombering reality, perhaps, for a lot of the more interesting theories progeniting around Bitcoin's origins. Anyways, does that mean that it can't change in the future? Yes, it can certainly change in the future. It's just right now, and for the last over 10 years, we have not seen that change, and I would say that a long-term trend like that is unlikely to change until it does. Until it does. So until we actually have a full-on a full-on confirmation of a reversal in one and a continuation in the other, like literally going the opposite directions for probably like a year, maybe even two at a time, I would say that there's no real reason to think that stops. At least from a trading perspective. Anyways, let's focus on Bitcoin now. So we'll go back into the lower term timeframes. Bitcoin shopping around the 200 simple on the 4 hour, looking like it's kind of losing a little bit of its momentum there. In fact, it certainly looks like looking like it's losing its momentum. I believe yesterday I said that if Bitcoin closes a 4 hour dildo below the 200 simple, very likely will come all the way back down to 93.50. That's not like all the way down. I mean, it's it's about $150, and I'd be looking for a short term bounce there once again. However, that should be a backfill on our last 2-day dildo, which we closed last night. Which is also right around the 21 exponential moving average right here on the 2-day as well. So if you are in the TA program, definitely reference that module because that is going to be likely a little bit of an edge, and that is going to be your first pass somewhere right around that region, maybe like low 9,300, I think is exactly where it comes in around. But overall, that's going to be the next short-term pivot. And because the ranges here are so damn tight, I mean, it's actually between the 200 simple and the 200 exponential, as you can see right here, the purple and the white in essence, which I'll actually just get rid of this horizontal right here because it's a little bit too floaty within that region. I think that the 200 simple is going to be a little bit more of a verifiable piece of edge right there. But overall, looks like we are going to come back down to that region. Do we actually break it or not? I don't have a strong opinion on that. I just have a strong opinion on if we do break it. If we close a 4-hour dildo, especially below 93.50 or wherever the 200 exponential moving average is coming in on the 4-hour time frame, then yes, I would be looking for a return back down to the low side of the range, somewhere around this trend line, which is actually going to be synonymous with the 4-hour 377 exponential moving average as well, and would be at current price action coming in around the very high 8,900 region and maybe even 9,000 if it takes a little bit longer than that. So that would be the must-hold area for Bulaws if they do want to continue to provide or paint in this ascending triangle right here, which would be a bullish reaccumulation formation and would still kind of air the probabilities in the favor of the upside overall. Now, again, remembering that traditional markets are looking more or less good here as long as it's above about 9,600. I would be skeptical that the next test down does break it, but there is a good counterpoint to that, and I can very easily be wrong on that. The reason why is because historical volatility percentile on our daily and on our 2-day is so fucking low that it makes me really consider that the next move that we have to the top side or the bottom side of the range can very easily break it. As you can see right here, we're at an outlier right now. We've been printing either ones or twos for the last almost week in historical volatility percentile on the fucking daily. Now, very few times in the history of Bitcoin have we even gotten this low for that long. The last time was actually September 2019, and that was setting up for the big move down from about 10,000 all the way to 6,000, or maybe even all the way to 4,000, depending upon your time frame on that. The time before that we took this long was this guy right here, and it wasn't even as aggressive as what we're looking at right now. This was even a little bit less in March 2019, where Bitcoin was getting ready for a big bad breakout to the upside all the way from 4,000 to 14,000. Pretty damn impressive. Time before that was, of course, November of 2018 right here, getting ready for a 50% move to the downside. And time before that was actually a couple times in 2018. Another one right here at 10,000, coming down to 6,000 right after that. So these are almost 50% moves, by the way. And then before that, I think we had another one to the upside right here. Yes, indeed, we did. Going all the way from 1,100 to 3,100, so almost a 3x actually off that next move. So my point is that we are going to be looking at a pretty big fucking move relatively soon, is what that suggests. And it does not imply a direction, but if we do look at correlations and we do make and we put precedence on NAS and SPY, I would say that upside still going to be what I have to lean towards here, although I'd say that this chart is starting to look a little bit more nasty. There are a few counterpoints to what I'm saying. Of course, the 2-day hidden bullish divergence is actually fully formed there. Just need to confirm this as a local low, which and a nice stop and reverse point, which we can do in a couple different ways. The first way would be to take out the last 2-day dildo high, which is about 9,600 or a few ticks below there. If we can do that, that will very likely initiate a move back up to the top side of the range. Top side of the range being about 98 to 9,900-ish region. Also, if we want to go down to a lower term time frame, this one also makes it a little more difficult. I don't think that is I don't think that's playable on a lower term time frame. I actually just think that taking out that wick high from yesterday was probably good enough. 12 hour, yeah, is going to either confirm as a local high here or a local low. It's kind of nasty, but I should remind myself that momentum oscillators are going to be once again in the Bulaw's favor, assuming that we can just hold here or higher. That is above the 94.50-ish region. In fact, let's go check out the reverse Stoke cross, which actually shows that 12-hour momentum will remain to the upside as long as Bitcoin's closing on a 12-hour basis above 92.50. 92.50 also the 89 exponential moving average, so it would make a nice natural target to the downside if we do start to actually break below yesterday's low. Sorry, not even yesterday's low, but the last 12-hour low at about 9400-ish region. So, the house of cards and dominoes falling both ways here. And actually using yesterday's 12-hour dildo as a nice pivot is probably going to get it, to be fair. But for now, momentum is technically still up. That also would imply that a 12-hour dildo closure below 92.50 is going to be very problematic overall, as momentum would shift back onto the downside and would put us very close to the resolution area of the downside of this ascending triangle as well, which would then initiate, at least in my opinion, at least another $1,500 move to the downside, probably more. Remember that the last times that we've had any signature resembling this on historical volatility percentile, we're looking at, if it does break to the downside, between 40 and 50% on average, which from this price point, just out of curiosity, let's see what that would kind of print. Bulaws, look away. 40% actually puts us in the mid fives. 50% puts us back around 4,500 low. Could it be another double bottom within this region? Well, it could be, and that would set up Bitcoin for one long-term massive descending triangle. Wait, don't say that, Krown. That means bearish. Okay, sorry guys. I mean that means that Bitcoin's just gonna moon from a lower price. Hey, if you learn how to trade, you don't have to worry about shit like this. That's my point, man. You don't need Bitcoin to fucking moon like a child, like a fucking Beanie Baby hodler, in order to make money. It's not easy either. Jesus Christ, man. It took me about a year and a half to really learn how to trade, and 2 years to really feel solid, I suppose. Daily Stokes are headed up right here. We did bounce off that trend line that we spoke about yesterday. Oops, let me get it back on, or maybe I already have it drawn in there. So nicely done. I don't really trust this. I don't really trust formations and stochastics, but I do trust trend lines, of which this one's going to be pointed north and going to be remaining to the upside as long as Bitcoin's closing daily dildos above 9,200 essentially. So what I can say now is that any sort of a daily close below 92.50 is going to be problematic. It's going to turn the 12-hour momentum to the downside and likely lead on into the daily as well. And that's going to really start to destroy this as your higher low. And if that gets destroyed as your higher low, yes, you still kind of have your last stop at 9,000 even, also the 55 on the daily right here. But that's not indicative of strength in any way, shape, or form. Again, still want to see areas broken more than anything else. But if I'm not just mentally masturbating here with looking at all these, realistically, I'm only going to be trading the levels to begin with. So doing all of this right here is like, it helps formulate a little bit of a bias, but at the end of the day, price action matters first and foremost, and that will take precedence, especially with what I'm doing, which you are free to do whatever you want. Of course, this is not financial advice. I'm not a financial advisor, and I can always be wrong too. I'm just sharing the way that I'm looking at these markets, for better or worse. Sometimes for worse, sometimes for worse. Anyways, looking at 4-hour right here, 4-hour momentum will turn back up to the upside with any sort of a 4-hour dildo closure above 9,500. I mean, this is getting cut really, really close here. Bulaws are going to be looking at this as some sort of like a consolidation, a flat consolidation coming off of this pop. Bears are going to be looking at this as just a lost momentum, which both are right, to be fair. 4-hour Stokes will be coming down, though, again, as long as we are below 9,500 from a pretty high area as well, which I would not be so excited about. At least for a more immediate bullish case. 3-hour going to have the same sort of thing. They're both coming from the same area, and 3-hour momentum will turn back up to the upside with a 3-hour close above 95.25 essentially. 2-hour basically the same area as well. 95.27 momentum turns back up. 2-hour Stokes coming down relatively hard. So could it be that that Bitcoin actually does put in a low right here? Yeah, possible, but still, I think the 200 simple on the 2 hours actually going to be getting things relatively right. Problem with that is that it's basically around yesterday's high at about 9,600. So does it give you all that much of an edge, from one way to the next? No, not really. So realistically, taking out yesterday's high is going to be the trigger that I look for continuation of the top side of the range. Essentially, 9,800, very very likely, maybe even 10,000, and then that would set it up for potentially a break of that range to the upside. But for right now, we don't have that just yet, and it's, well, doesn't mean that it can't happen. Just I would need to see that happen first and foremost. Hourly looks like it's contracting into a nice move as well. So it's actually reasonable to think that we will have a resolution on the short term range today, as this comes down relatively hard. Should come down to an apex, and it's typically likely break area sometime around my midnight, which I live in the Eastern European zone in Helsinki, Finland. So that would suggest that that would suggest, I don't know, like midday for those of you in the Western Hemisphere. By the way, Joule sell signal on the hourly got things okay there. Let's see, where did it actually hit off? It hit off on this dildo right here at about 95.25. So for the people asking, did that one play out? I would say that the easy part of that one played out. It's an hourly. It's only a $100 move. I mean, don't get your fucking don't get too excited about an hourly signal. This is why I suggest, if you are going to play Bitcoin and Bitcoin exclusively, or cryptocurrencies for that matter, I found it a lot better to delete all timeframes below a 4 hour, to be honest with you. It doesn't mean that you can't make money on the lower term timeframes. I just don't think that the bang for buck is there. If you want to trade short term timeframes, it's very viable. That's how I used to make my living in traditional markets, trading the 5 minute and the 15 minute. But that was in traditional markets, which only trade for about 6.5 hours a day. Forex, kind of the same thing as well. You can trade lower term timeframes and be very, very successful there. Bitcoin, I think, is just more or less a waste of time. But that's just my opinion. Again, if you're making shit tons of money on the lower term timeframes, more power to you, man. More power to you. Let's see. Do we potentially have hidden bullish divergence here? Kind of. Actually, yes. Yeah, we do. That's probably good enough to get it back up to 95. It's crazy. I mean, the margins are so fucking tight here. It's just it's almost disingenuous to talk about it. It's like, it's just, I wouldn't trade this myself right now. Daily on CMEs, painting a little bit of a different picture, perhaps. I want to check out the 2-day here as well. 2-day had a decent close, did regain the 10 simple, I believe. Yeah, by 15 bucks. But good enough is good enough. And I think that the 2-day chart's a little bit more obvious. Again, has the same hidden bullish divergence that we see on spot price action between this point and this point, ever so slightly, but it is certainly present. And I can essentially make the same sort of analysis on it, as long as we're closed, and especially 12-hour or daily dildos above 93.50 on CMEs, which have about a $50 to $100 price premium on spot price action. I still look at this kind of like a backfill, getting ready for potentially another move to the top side of the range, as that hidden bullish divergence is present. But the second that we close below there, we're very likely going to reinitiate another test to the 9100-ish region. That probably means spot back down to 9,000-ish region. That's not going to look strong. You want, if this is going to be your higher low right here, you do not want a secondary chance to buy that higher low. If it is going to be efficacious. And same thing on historical volatility percentile as well. I mean, this is incredibly low. I actually don't even, we have one example in the history of CMEs on the 2-day of being this low before, and that was November 2018. Getting ready for, look away, Bulas, look away, 50% down. Very, very nice. So, to kind of wrap things up, I suppose, on these time frames, let me just check on time. Jesus Christ, man, it's already 28 minutes in. As far as everything else goes, really nothing's changed for me. 12-hour or daily total closure, especially below 9,000, and I get bearish for a move at the very least to 7,500. That's a 0.5 fib. Also, the last big breakout that we saw from April, leading up from 7,000 to 10,000 essentially. And I do think that there would be a bounce along the way, probably a big one at the 382, somewhere right around 8150-ish region. Also, the 200 simple on the daily as well. So I do like that area. Also, you can see that this is a nice little liquid zone coming in from that last major retest on that higher low. But I don't think that would be a reversal. I think that it would be sold into, and we'd very likely hit the measure move down to the 0.5. And then personally speaking, I do think that the 618 would probably get tested after that. I don't think that we'd bottom out at 75, but I'd want to see it in real time before making that judgment. By the same token, to the upside, still the relevant area is 9,900 for the more aggressive people, 10,000 for the more conservative people. That would initiate a measure move all the way up to a little bit north of 11,000, which north of 11,000 would imply a higher high on a weekly basis above our last traded high in February 2020, which would then very likely initiate from a volume profile perspective another move back up to the top side of the range, the same range that we've been getting rejected from for the last 3 years, almost going back to January 2018 at 11,500. Also, one of the gaps present still on CME futures right here, as you can see, coming in from August 2019, and that's where things really get interesting from the macro perspective. As long as Bitcoin's below there, it's difficult to get excited for like the moon boy predictions of fucking 20,000, 30,000, 100,000. I even saw an article this morning from Forbes of all people saying that $1 million Bitcoin, not all that crazy. Well, it might not seem that crazy, but but when major publications are saying shit like that, it makes you a little bit skeptical, I suppose. Anyways, you can see here very clearly that we have change of behavior above this area right here, 10.5, and then a macro change of behavior, especially above 11,500, perhaps better seen on the weekly for spot. Yes, indeed. You can see just things fall off the fucking face of the earth right there. So that's where I actually do turn into a little bit of a moon boy myself, and but not before then. Before then, it's just a game of ranges here, of which the range that we're currently in is getting so damn small that do have to reasonably think that we're going to have a resolution probably very soon. We are at an outlier of price action right here as far as things go. Okay, cool. So let's go check out, I want to check out some Forex, or sorry, let's actually go check out the probabilities first, and then we can go look at a little bit of Forex. We'll look at the current bars right here. By the way, futures are actually squeezing up, so very nice. Now, unfortunately, this doesn't really help. I'll use 9,600 because 9,600 was a high of yesterday. And then for the low, I'll actually do 93. This is going to be the short-term range. So above the top side of the range, I would be looking for an extension to 9,900-ish region or 9,800, something like that. And that would potentially even set it up for a breakout to the top side. I mean, especially with volatility contracted this much, you have to be thinking that we are setting up for a multi-$1,000 move here, which would, well, that would kind of be implied. To the downside, 9,300, again, not going to necessarily imply a breakout to the downside of the range. That's still 9,000, but very likely a test down there. And that would really start to make this look like a much more bearish picture overall. But still, we're right there smack dab in the fucking middle. So let's go check this one out. Let's see what the probabilities show. 43% to the upside, 31% to the downside. Now, of course, that does suggest that the upside is more likely, but the thing with this is that when we're talking probabilities, when they're this high on both sides, it's saying that we can break out both ways, which is the mathematical way of saying it's like the mathematical way of proving that TA is we can go up or down or sideways, but we're actually more likely to go up or down from here. Which people fucking hate, and I totally understand that, but just kind of like proving it with mathematics is a fun way to kind of disarm those sort of very silly and unassuming criticisms of technical analysis. It just shows that people don't understand the gray areas of trading. Of course, it has to be like that. That's all that it is. We're just talking about statistics. If you don't understand statistics, I don't think that you can be successful trading with technical analysis as your main edge. At least I would be hard pressed to find someone who would do it like that. I mean, that's the point of fucking TA, essentially. Plain statistics. So for the 12-hour, 41.75% versus 22.5% about. Still squeezing the upside there as well. Momentum turning up as well. So it does favor the Bulas here, but time is ticking, and I don't know how much longer Bitcoin can go sideways here without just fucking. I'll leave that one for later. Let's go check out. I don't have anything to update on gold. It's still the same shit. It's still in the same fucking area. Let's go check out Euro dollar. Euro dollar looks like it's setting in a higher low. Let's check out a weekly. Weekly is kind of weird here. Do have to think that as long as it's above about 112, I am overall looking for more upside, but I do think that we will come back down and test 112. But this is going to be taking like another month. This is going to be slow moving too. Let's go look at dollar yen. Curious what this one looks like on a monthly massive consolidation right here. It does seem to be setting some higher lows, but at the same time, do I love this chart? Not really. If it can close this monthly above 108, that would look good for another test to the top side of the range at 112 overall. But that's, again, going to be taking like a month and a half, 2 months-ish region. What is the other one that I like to look at? Let's go look at Dixie really quick. I remember looking at this one yesterday, and I didn't really have any real real read to be made on this. Yeah, I don't think I have a good read to be made on this. I think that it bounces here, but I'm not telling you anything that you don't already know. Probably bounce back up to like 90, 98 and a half region, but that doesn't really help formulate my bias for the long term here. I guess it's still an uptrend for now, but overall, I would have to hold off. I think I'll come back to that one in a couple months. Anyways, wrapping up Bitcoin once again. Short term. Move below about 9,400, and I'd look for extension. These ranges are too fucking tight. You know what? No. I'm not even gonna do that. It's too fucking tight right there. I mean, unless you're like really obsessed with those lower term time frames. What we can do is this. Okay. Either a 4 hour any sort of a move above yesterday's high, above about 9,600. And yes, I would look for extension to play out that bullish divergence or hidden bullish divergence all the way up to 98, probably 99, test somewhere in this region right here. Does not imply a breakout to the upside just yet until we close above this region at the very least on a 4 hour. By the same token, to the downside, the ranges are very tight here. You could be using 9,400 probably, but I wouldn't do it myself. I'd still wait for a break below the 200 exponential moving average on the 4 hour, and then yes, I'd target a move back down to the $9,000 support. Probably another bounce there, but that would just not look good long term. Bounce pro would probably get sold into. I mean, this would be your proverbial lower high at that point. In all momentum also will start to turn down, remember, as well. So it's kind of like a ticking time bomb, and so I'll leave you off with that. Another boring day in Bitcoin land, perhaps in order. But I would like to wish you well once again. Take care, and until next time.